The legal conflict between Ripple Labs and the Securities and Exchange Commission has been an ongoing saga since December 2020. This contentious battle involves significant allegations, including the accusation that Ripple raised over $1.3 billion through an unregistered securities offering by selling XRP. One of the key points of contention in this case has been the testimony of Andre Fox, a crucial witness whose evidence has been heavily debated by both parties. Disagreements have also emerged regarding the sealing of specific financial records, with the SEC deeming these documents critical to their case. The conflict over Andre Fox's testimony has been particularly intense. Ripple initially contended that Fox's statement was an uninvited expert opinion rather than standard summary evidence. However, the SEC maintained that Fox's testimony relied on elementary mathematical operations applied to Ripple's financial records to simplify the evidence presentation to Judge Torres. This back and forth highlights the strategic legal maneuvers employed by both sides as they attempt to strengthen their respective positions. Ripple's subsequent letter provided additional substantiation for its initial request to exclude Fox's testimony, arguing that the SEC failed to demonstrate that her declaration was not expert testimony. The dispute over financial records adds another layer of complexity to the case. Ripple's request to redact and seal certain financial and security sales data has been met with resistance from the SEC. The regulatory body argued that these records are judicial documents essential to the court's decision on remedies, thus warranting transparency. Ripple, on the other hand, contends that its current sales practices, particularly those related to its on-demand liquidity, ODO product, differ significantly from the over-the-counter transactions in question. This ongoing disagreement over the handling of financial records underscores the contentious nature of the case and the high stakes involved for both parties. As the legal proceedings progress, the intricacies of the case and the potential for appeals contribute to the likelihood of a prolonged resolution. Despite entering the trial phase, the complexity and significance of the case suggest that it may continue for years, potentially drawing out until 2025 or beyond. American attorney Jeremy Henn suggests that a resolution could be reached as early as this summer, potentially involving a $100 million settlement. Ripple's series of partial court victories over the past year have fueled speculation that the company may have the upper hand, despite the SEC's steadfast pursuit of penalties. In parallel, Ripple's CEO Brad Garlinghouse has been advocating for a unified national regulatory framework for cryptocurrencies. This call for regulatory clarity has been echoed by international bodies such as the Financial Stability Board (FSB), the International Monetary Fund (IMF), and the Bank for International Settlements (BIAS). These organizations are working towards establishing a global regulatory framework for cryptocurrency activities, with the G20 expected to reveal this framework between July and September 2023. The aim is to avoid regulatory fragmentation and create a cohesive approach to managing digital assets. The potential global regulatory framework represents a significant step towards legitimizing and standardizing cryptocurrency regulations. Such a framework would address the inconsistencies and uncertainties that have plagued the industry, fostering a more stable and predictable environment for innovation and investment. Ripple's involvement in these discussions highlights its commitment to working within regulatory boundaries, while advocating for a balanced approach that promotes growth and innovation. Looking ahead, the year 2025 appears to be a pivotal year for regulatory movements and the adoption of central bank digital currencies (CBDCs). Russia, for instance, is aiming for mass adoption of its CBDC platform by 2025, with work on this project having commenced in July 2023. Similarly, Brazil plans to launch its digital currency by early 2025, while the European Central Bank anticipates deploying the digital euro in November 2025. These developments align with the broader transition to ISO 20022, a new financial messaging standard that promises to enhance the efficiency and interoperability of global financial transactions. The convergence of regulatory clarity, technological advancements, and institutional adoption sets the stage for significant growth and transformation in the cryptocurrency market. As stakeholders navigate this evolving landscape, the importance of standardized protocols, robust privacy protections, and collaborative efforts between public and private sectors becomes increasingly apparent. The ongoing legal battle between Ripple and the SEC, alongside global regulatory initiatives, underscores the dynamic and rapidly changing nature of the cryptocurrency industry. In conclusion, while the legal dispute between Ripple and the SEC remains unresolved, the broader trends and developments in the cryptocurrency market point towards a future characterized by increased adoption, regulatory clarity, and technological innovation. As the industry continues to evolve, the establishment of a global regulatory framework and the adoption of CBDCs will play a crucial role in shaping the future of digital assets. Stakeholders must remain vigilant, informed, and proactive in seizing opportunities and managing risks in this dynamic environment.